Hello, James Preston here for Kalkinemedia. The future of China's largest property group Evergrande hangs in the balance as the real estate giant faces its worst liquidity crisis to date. The crisis has shaken the Chinese market as well as global markets. Many pundits are watching the developments with an eye to the Lehman Brothers collapse of 2008, when the US investment bank went bankrupt due to the subprime mortgage crisis. Evergrande, the world's largest real estate borrower, is on the verge of a possible default as its outstanding debt ballooned to $310 billion by the end of the June quarter of 21, the largest by any publicly listed real estate company globally. This week is going to be critical for the beleaguered company as it faces the daunting task of paying interest dues of $83.5 million to its March 2022 bondholders on September the 23rd. Adding to it, Evergrande has to make another payment of $47.5 million for its March 2024 notes due on September 29. If the company fails to make payment of the interest within a period of 30 days, both bonds would default, which in turn will affect negatively not only China's property market but also global markets. In a much-needed respite, the company, Evergrande, has reportedly reached a deal with its bondholders. The company's subsidiary, Hengda Real Estate Group, said this morning that it would make a scheduled bond interest payment on its September 25 bond on time on September 23. The company, however, did not give any clarity on dues payments related to March 2022 bonds and March 24 notes. However, the risk of default still looms as the Chinese builder faces mammoth dues of $37.3 billion in the next 12 months, which is nearly 3 times the company's cash reserves worth $13.5 billion. So, is the Australian market in trouble as a result? Well, while fears about the spillover from the potential collapse of Evergrande roiled the Australian stock market on Monday, the benchmark index, the ASX 200, gained some ground on Tuesday. The news of negotiations between Evergrande and its bondholders gave a strong boost to the Aussie market on Wednesday, helping the ASX 200 close 0.3% higher. However, investors needed to be cautious as the Evergrande crisis is ongoing. Australia's central bank on Wednesday warned that rising household debt, merely based on soaring property prices, may lead to financial instability. On Wednesday, RBA Assistant Governor Michelle Bullock explained sharp rises in housing prices that are not associated with fundamentals could lead to instability by raising the risk of the subsequent decline. The bottom line is that China is Australia's biggest bilateral trade partner. The potential fallout of Evergrande will adversely impact the Aussie financial markets. However, the Australian market is in a better position to absorb a potential shock from a big company default, which is evident from a strong rebound in the equity market. If you enjoyed the information contained in this video, then please make sure to like, share, comment and subscribe, and of course don't forget to press the bell icon to stay across the latest videos from Kalkine. For more information, just head across to the website kalkinemedia.com. I'm James Preston, reporting for Kalkine.